Hello everyone, and welcome to this presentation of the secret ingredient your candlestick trading is missing. Now I know most of you have applied at some time or are currently using candlesticks in your trading method or in your trading plan. And it's been my experience that most people fail or have very difficult time trading with candlesticks. In fact, if you look at this example right here before we begin, someone looking at this would say, well, I see no pattern here. There's nothing really that can help me. But in today's presentation, I'm going to share a secret ingredient where hopefully you'll be able to spot, even in sideways markets like this, which appear sideways, but the secret ingredient will tell you to take advantage of potential gains such as this. Okay, so it promises to be a great class today, and welcome everyone. My name is Steven Primo. I am the president and founder of Specialist Trading. And if you're new to my presentations that I give on a weekly basis, we're all about educating you. It's been my experience in the nearly 4 decades I've been trading is that the reason why most traders fail is because they're not supplied with proper information or education to trade. And so when you're not supplied with this education, what's the first thing you do as a trader? You go looking for it through someone or something else. In other words, well, someone in some chat room has the best idea for how I should trade, or someone on TV knows better than I do on how I should take the signals or not. So you just basically mirror and mimic whatever someone or something else is doing. This is the way most traders trade, myself included, when I first started out. And in my opinion, this is why up to 80% of all traders fail. It's not because they're not qualified to trade or they don't have enough training. It's because you're relying on someone or something else to tell you what to do. Now, I started trading roughly 40 years ago. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist, and if you're not familiar with what a specialist did, because there aren't a lot around anymore, they simply made markets in stocks. They were this person who specialized in buying and selling that particular equity. So if you wanted to purchase, let's say, IBM or Waste Management, 2 of the stocks that I was a specialist in, you had to go up to the trader who specialized in that. He would either buy or sell from you. So I did this for 9 years. I traded through the crash of 1987 and the bull market that followed. I've traded in quiet markets, in crazy markets, straight up down markets, straight down markets, ranging markets. I traded just about every methodology, strategy, and system you can think of. So in my experience of 4 decades of trading, I know what works in terms of consistency, and I know what doesn't. So this is what we do at Specialist Trading. About 8 years ago, I teamed up with Pro Trader Strategies, and we just simply educate all of my students around the world in virtually over 100 countries around the world, in every state in the United States, and I just educate them the things that I have found to have a high level of consistency in. And these are things that I use in my own current trading. So that's what we do at Specialist Trading, and in a nutshell, we are first and foremost an educational company. Now, we are required to show you this before we begin, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this secret ingredient today in your candlestick trading, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Once again, we are required to show you this, so as you're taking a brief moment to view our disclaimer, I would also like to invite each and every one of you who haven't done so already to follow us on Twitter. There's our handle right there. You may want to copy that down. It's an abbreviation for Specialist Trading at SPC LSTTRADG. Each and every day I post information anywhere from little financial bits of wisdom along the way to signals that our strategies have generated, but simply for educational purposes only. Okay, now as I stated, my goal is not to force feed you signals. My goal is not to tell you what to buy or sell on a nightly basis, or to tell you what the perfect time frame is, or exactly what you should be doing every day. My goal is to teach you how to trade with the specialist edge. This is the same edge that was taught to me that was able to turn my trading around, because believe it or not, my first year or two on the floor of the exchange, I suffered tremendously. So I know what it's like if some of you are going through a very difficult time. It's very discouraging to put in all the work and use all your hard-earned money and not see any results. So that's what my goal is and my purpose is as your mentor. I want to teach you so that ultimately you don't have to rely on anything, even myself. You've got the information, you know how to trade on your own, and hopefully you'll be able to trade another 20, 30, 40 years down the road. That's what our goal is, okay? So, since this is a class, I always state I love your questions, but please, I'm going to show you a lot of slides. We're going to go over a lot of information today. I'm going to give you a lot of free stuff that you can start using as early as today if you'd like. But please remember that, if we ask a question every 5 seconds, sometimes it bogs down the presentation. So if you have a question, kindly wait to the very end of the class in about another 20, 30 minutes from now, and then we'll go over everything, okay? We'll run a lot smoother that way. Now, the only question I will answer is the most common one, and that is this being recorded? Yes, it is. Pro Trader Strategies and I record all of our presentations. So if you have to leave early, if you have difficulty with your computer, or if you're just not being able to see the presentation in its entirety, contact Pro Trader Strategies, and they will send you a link to this presentation. All right, so why don't we begin? Once again, if you just came in, kindly keep the questions till the very end of the class. All right, so let's review, first of all, candlestick patterns, because that's what we're going to be talking about today, right? We're going to be talking about the secret ingredient and what I feel is the main reason why most traders fail when trading with candlesticks. Now, there are a ton of candlestick patterns, okay? Anywhere from dojis to shooting stars to morning stars to hammers. All right, there's tons of them. The technique, the secret ingredient I'm going to be sharing with you today virtually works on each and every one of them, okay? But for those of you who aren't familiar with a lot of different patterns, and we don't want to really make things too complicated because that goes against our philosophy. We want to keep things as simple as possible. We'll only focus on one pattern today, and that is probably the simplest pattern to identify and probably the most common, and those are engulfing patterns, okay? A two-bar pattern. So for those of you who aren't aware of what an engulfing pattern is, just a brief refresher course, it's a two-bar pattern, whether it's bullish or bearish. In a bullish engulfing pattern, bar number one's open to close range is down, okay? And bar number two's open to close range is up. Now the open to close range of bar number two right here totally engulfs the open to close range of bar number one. When you see this happen, this is kind of like a mini reversal pattern. The propensity is for prices to continue on an upward basis for the next 3 to 5 bars, okay? So it's a pretty good edge. And conversely, we have a bearish engulfing pattern. Now, this is just simply the opposite side of the coin. It's a two-bar pattern. In this case, though, bar number one is usually up from open to close, and bar number two's range from open to close is down. At the same time, the range from the open to close of bar number two totally engulfs the range from open to close of bar number one. Okay, when you see this, there is propensity for prices to head lower. There's a nice edge there as well. All right. Now here is the standard definition of engulfing patterns. All right. The engulfing candlestick pattern is a reversal pattern, usually occurring at the top or bottom of a trend. Okay. This is the standard conventional wisdom ways in which to trade engulfing patterns, or for that matter, the majority of candlesticks, they are reversal patterns. So if you're in a downtrend, you're looking for obviously a bullish engulfing pattern. If you're in an uptrend, you are looking for a bearish because you want to find something that's going to tell you that the trend is reversing. Now, as we look at this example right here, we see that obviously we are in a downtrend on this generic chart. Doesn't matter what chart it is, what time frame, because candlesticks will work on any market, any time frame, any direction. So obviously we are in some type of a short-term downtrend, right? So what we're looking for is a reversal of that downtrend. And what do we have here? Well, lo and behold, we have a bullish engulfing pattern, the two-bar pattern. Now, this is the way I was taught. So what I would have done nearly 40 years ago would have been to buy at the close of that second bar, because that's the market, according to the candlesticks, telling me that price has stopped going down. It's a little mini reversal, and I'll probably make a nice little gain to the upside. And then you step in and buy, and this happens. Does that look familiar to anybody? Okay. Now the market continues to go lower, and you think, well, I have a loss here. Maybe you're even continuing to hold on to your first position, but you see, like, maybe I just got in a little too early. And what do you have here? You have another bullish engulfing pattern. So this one is the one that's going to work. Okay. Maybe you got in just a little bit too early, so you double down, you get back in on the long side, and this happens, okay? Does that look vaguely familiar to anyone? I know it does to me, because when I first started trading candlestick patterns, this is what used to happen all the time. Now, sure, every once in a while I would have some really, really nice, reversals, and they would work like a charm. But overall, if I stuck with them long enough, it was just like the slot machines, just like in Las Vegas. It'd give me winners every once in a while, but over time, I really wouldn't have anything to show for it, because most of them would give back the gains I just made. So What is the secret ingredient that is missing from candlestick trading? Because obviously candlestick trading does work. Well, it took me a while to figure this out. My mentor showed me this, but the real secret ingredient is really simple. The secret ingredient is you just have to trade candlesticks in sync with the trend, all right? We're always taught to use them as reversal patterns. And I'm here to tell you that there is no consistency in using candlestick patterns that way. Trust me, take it from someone who's tried and who's had a difficult time. I'm not saying you won't have winners. From time to time, you will. But the real consistency in trading any type of candlestick pattern is when you are in sync with the trend as opposed to trying to use them as reversals. Okay? That's the secret ingredient. All right, so if it's that simple, we need to find some trending tools because trending tools are what are going to help us to be in sync with the trend. And there are a number out there. These are just three very generic ones. Indicators. A lot of people like to use indicators such as moving averages, moving average crossovers to tell them what the trend is. Other traders like to look at patterns. Okay, they'll look at higher highs, lower highs for an uptrend, or lower lows, lower highs for a downtrend. Still, other traders are, convinced that using multiple time frames tells you the trend. So if the daily bar looks like it's going straight down, then you want to make sure that you're trading the hourly bar or something smaller than that is going straight down too. That's the only way you can find out the time frame. Now, these are all, a certain level, have some type of consistency to them. They're okay. They're not bad, but that really isn't the secret ingredient. In my nearly 40 years, there is something that I have found that is the real secret ingredient to get you in sync with the trend. Now, if you've attended my presentations before, you know how excited I am about this tool because I use it on a daily basis. This is something I was introduced to nearly 40 years ago, and we call it the PET D. When I first learned about it on the floor, it was simply called the formula because we had to calculate it by hand. But now that we have, high-speed computers and we have, programmers, we're able to formulate it into a color bar tool. So if you see a series of green bars, then the short-term trend is up, okay? If you see a series of red bars, the short-term trend is down. There's no multiple indicators you have to look at, no different time frames, no patterns. It's that simple. It's already laid out here in front of you. There's nothing you have to calculate at all. Now, if we look at this example here in Apple, and you're going to be seeing this a little while later in the presentation with some actual trade setups, but just looking how great this tool is for discerning what the trend is, this is the way most traders would trade Apple. They would wait for some kind of confirmation. Obviously, we're trading up here. Okay, now we break out, and we're making higher highs and lower highs. So this looks like we're in an uptrend. I'm convinced we're in an uptrend, so I'm going to buy somewhere around here, maybe around here on this breakout. So you get long. And Apple does continue to go higher. You feel pretty good about yourself, and then this happens. You don't have enough time to get out. Maybe you just took a minor loss, but at least you didn't make any money. And that's what usually happens with conventional or kind of the generic ways I showed you about finding the trend. They'll work pretty well, but nothing great. Now let's apply the color bar tool I told you about, the PET D, that simply colors either green for a short-term uptrend or red for a short-term downtrend. If we apply it to Apple, look how beautiful this helps us discern what the trend is. And it doesn't tell us anywhere from up here to up here that we're in an uptrend. We knew well back here when we had consecutive green bars that Apple was already in an uptrend, well before it continued up much higher. And we also knew well in advance of the impending downslide. That's the beauty of the PET D. Now the PET D doesn't repaint, it doesn't recalculate. There's not a new formula that comes out every year or two that you have to upgrade. This is the same formula I've been using for nearly 40 years. Okay? The beauty is when I first started using it, I could only apply it for daily bar trading because by the time you figured out the next bar, if you were looking at 5-minute bars, it was time to calculate the next one. You wouldn't have time to look and find out what's going on. So we could only apply it to daily time frames. But once again, because of programmers and high-speed computers, you can use this on any market, any time frame, in any direction. So there's no type of requirements that there's only one way to trade it and no type of restrictions. All right, so here's how we're going to apply it to candlesticks. Remember, we can use this for virtually any candlestick pattern. Dojis, morning stars, shooting stars, hammers, it doesn't matter. But because we want to keep it simple today for perhaps the people that are just starting to trade with engulfing patterns, we're just going to, keep it to one pattern. Simplest, easiest one to identify. That's bullish and bearish engulfing patterns. All right, so let's say we know how to identify an engulfing pattern. Well, instead of looking for the trend with an indicator or with a moving average or with some guys telling you in a trade room, once we find a bullish engulfing pattern, we're only going to buy if the engulfing bar, that's bar number 2, is colored green. See how simple that is? So if we look at this chart here, which I first showed you in the opening slide here of the presentation, conventional wisdom would say, well, Steve, there's no trend here. You said to trade with the trend. The moving average I'm trading is actually headed sideways to lower, but it's basically just, treading water. I'm not going to trade anything here. Well, you're going to miss this bullish engulfing pattern because we have a bullish engulfing pattern right here. Now, I know the way we've been taught is like, well, yeah, but we only find and trade bullish engulfing patterns at the bottom of a downtrend. That's the way I was taught. That doesn't work in terms of consistency. We're just going to take it if bar number 2 is colored green. We don't care what the previous bars were. We just want to make sure that bar number 2 out of that 2-bar pattern is colored green. So we add the pet D. Guess what? It's colored green. So that's our confirmation to buy. And look what happened. Stock goes up 5 points in the next week. See how simple this is? It's been my experience that trading is really simple. It's just us, the trader, that makes it more complicated than it has to be. I mean, think about it. Look how many indicators you have on your screen right now, how many news services you rely on and go to in order to make a trade, how many chat rooms or trading rooms you go to. I mean, that's just overcomplicating, and take it from someone who knows. That's the way I used to trade, and it didn't work. Okay? And look at the screen in front of you. All we have is the pet D plotted. That's it. That's all we needed to know here. Now, let's say we see a bearish engulfing pattern, right? We don't need to look at a ton of indicators. We don't need to have patterns that tell us what the trend is. We're going to sell a bearish engulfing pattern if bar number 2 is colored red, all right? So, as we see here in this example in DVN, well, this looks like we're in a downtrend. There's really nothing we need to identify here because we've been going lower, but remember, we've all been taught that, well, if we're going lower, we want to look for bullish engulfing patterns. And I have 2 bearish engulfing patterns here. So conventional wisdom would say, well, you don't want to take those because we're looking for a trend reversal. And the trend is going lower, so we're looking for bullish engulfing patterns. That's the old way that we're all been taught. There's no consistency in trading candlesticks that way. So we want to be in sync with the trend. And all we need to know is that bar number 2 of these bearish engulfing patterns are colored red. So let's add the pet D, and bar number 2 is red on both of these setups. So if this isn't a sell signal, I don't know what is, okay? In fact, all of the bars have been colored red. So we're in sync with the trend, and we have the secret ingredient that we're trading in sync with the trend with the pet D, and look what happens. Stock goes lower. See, at this point, if you tried it this way, you said, well, I guess this stuff works pretty well, but we've really had a nice sell-off here. I want to take advantage of this and maybe cover my short because what do I have here? I have 2 bullish engulfing patterns. All right, so maybe Steve's stuff does work, but I don't want to fight conventional wisdom, things that have been trading for hundreds of years. So let's say you decide to jump in and buy. Well, if you're a student of mine, I would advise against it because a bullish engulfing pattern is a 2-bar pattern as well, and bar number 2 needs to be colored green. What color is the outline of the up bar number 2 on both of these examples? It's red. So we're not going to take that trade. We're not going to take it at all. And it's a good deal we didn't. You see how candlesticks work much better when you're in sync with the trend. We just had 2 examples here of where that was a trend reversal, and it didn't work at all. Now, if you had taken the very first sell signals, you could have still been in this trade. It's up to you. Remember, it's up to you to make the decision, not me. I'm not going to tell you how to trade. That goes against our philosophy. But we give you all this information in our strategies. We give you tons of different variables, and then you decide. You can take 1 point, 5 points. It's up to you. Okay? Now, if you were in the trade or wanted to get back in, well, what do we have here? Another bearish engulfing pattern, and bar number 2 is colored red. Most people would say, well, Steve, you can't take this. The stock has gone down far too much. Well, not really. Because if you had taken the very first signal or 2, that's 25 points in 2 months to the downside. Okay? So the point is, the secret ingredient is to trade any type of candlestick in sync with the trend instead of against the trend, instead of trying to find some type of reversal. Now, what's the best thing I know of for finding the trend as well as the simplest? It's the PET D, as you can just see. All right, so let's look at some more examples so you really understand this concept and you can really increase your odds for consistency trading any type of candlestick pattern. Remember, if you do have a question, for those of you who may have joined us late, remember, we will take the questions at the very end of the presentation, okay? All right, so let's start again. Let's look with some stocks here. We look at HUM. Now, obviously, HUM is going higher. Conventional wisdom would say, well, Steve, I've been taught to go short, because we're looking for some type of reversal. And what do we have here? We have a bearish engulfing pattern, okay? But bar number 2 is colored green. A bearish engulfing pattern needs bar number 2 to be red. So you're not going to take that trade. Don't do anything. All right? But what do we have here? On the very next bar, guess what? The stock goes up. And at the same time, we have a bullish engulfing pattern. And both bars are green. So that is a very strong setup to go long if you like. It's not required. This is not a system. This is just giving you high consistency trading points. And it's up to you whether you want to take it or not. Remember, you're in charge of your trading. That's the only way you will become consistent, by making your own decisions, not by going to a room and finding out what everyone else is doing or having someone tell you. You've got to make the decision. So we give you all this information to make your decision off of, okay? So you could have decided to go long HUM, and it would have been a good point because 3 days the stock went up 12 points. You see, the market tells you what it wants to do, but we've been trained never to listen to the market. We're always trained to listen to some news event or what earnings are or what some guy's saying on TV, but we never are trained to listen to the market. But my job is to train you on how to listen to the market, and the PET D translates what the market wants to do. Let's look at HRB. Now, someone looking at this would say, well, great support here, Steve. This is where all of I like to follow all the institutions in volume, and the institutions are buying right here on this double or triple bottom, and you got to buy this. All the guys I trade with and all the trading rooms I go to love this stock, okay? Well, let's add the PET D. The majority of bars here are telling us there's no support. We're in a downtrend, all right? We're not going to buy anything if the bars are colored red. I don't care if we're at some so-called support level that all the institutions love. I used to trade on the floor, and I used to deal with the institutions all the time, and the majority of them lost money. So I don't know why anyone would try and piggyback off what institutions are doing, okay? So as we look here, we're not going to buy anything, and it would have been a good idea because look what happened to the so-called support. The stock broke down. Now at this point, all the institutions and everyone, all the smart money, so-called smart money, is scrambling to buy at lower prices, right? I mean, obviously, if that support didn't work, well, it's got to be great support here because look at how much we dropped in such a short time. You got to pick up some cheap stock, right? What color are the bars? The bars are red. We don't buy if the bars are red. And at the same time, we have a bearish engulfing pattern. So what is the market? Not some institutional, not some volume guy, not some guy on TV or their earnings. What is the market telling us? It's telling us it wants to go lower. All right, so we sell and the stock drops another 8 points. See, that's the beauty of being in sync with the trend. You will increase your odds for consistency. And also, if you happen to miss one, well, guess what? There's always more setups as long as you're in sync with the trend. Now, we showed you that chart in Apple earlier, how it pinpointed the trend. Could we have taken advantage of that? Sure. Once we apply the PET D, what do we see here? Well, we see the majority of the bars going up were already green, and look at all of the bullish engulfing patterns. So you had a lot of examples here to go long. If you had taken the very first one, well, that's 7 points to the upside, okay, that you could have taken advantage of. You could have taken 1 point, 2 points, 5 points. It's up to you. But at this point, what do we find out? We have a bearish engulfing pattern, and bar number 2 is colored red. So if you were still in the trade, or if you were flat and wanted to get into Apple, it wouldn't be a good idea to go long now, because what is the market? Not some investing guy on TV or some guy on a webinar. What is the market telling you? It's telling you it wants to go lower. So this would have been your point to exit your long or maybe move your stop up. If you're more advanced or so inclined, you'd go short. And the stock fell 20 points in the next 2 or 3 weeks. Okay, all because the market told us. How about GRMN? Okay, Grumman, this is this past July coming into August. Now we're in an uptrend. It's safe to say we're in an uptrend. We don't need to apply the PET-D to find that out. We don't need to apply an indicator. It's obvious we're in some type of a short-term uptrend. Conventional wisdom would tell us, well, we've got to look for a top. We're looking for a bearish engulfing pattern. Nope. If the majority of the bars are green, we are looking for a bullish engulfing pattern because we want to be in sync with the trend. And it would have been a good idea to trade this way. The secret ingredient is trading candlesticks in sync with the trend because the stock rose 10 points. Now, obviously, some news came out in Grumman coming into August, this past August. We had no idea what the news was. No one called us up and told us, tell your students to go long because the stock's going to gap up and go up about 10 points in 3 or 4 days. We're just listening to the market. UTX, now someone looking at this would say, well, Steve, there's no real trend here. We went down, back up, now we're coming back lower. So I've always been told, stay out of these rangy markets. This is where you get whipsawed. This is where you run into trouble. It is true. Many times you will run into trouble. There's nothing that can prevent you 100% of the time from losing money. I'm not going to sit here and tell you that, even when we're trading with the PET-D or candlesticks, that it works 100% of the time. That would be silly and foolish on my part as your instructor. I would never say that. But many times we gloss over things without really looking first. The reason why is because if you add the PET-D, you see that the majority of bars were actually green, telling you that you were in an uptrend. Even when we sold off here, this was a nice pullback trade, okay? And we're going back up. But right here, we start to turn red. And what do we have? We have 2 bearish engulfing patterns, okay? Bar number 2 is red on both of them. So this was your signal that actually there was a trend in place. It was to the downside, and the market was telling you it wanted to go much lower. So you could have sold on either one of these 2 setups, and the stock fell down 8 points coming into this past week in September, okay? How about ZBH? This is an older chart, but look at the strong uptrend it's been in, okay? Once again, in hindsight, it's easy to see that this has been in an uptrend. This is where I get from most of my students. They say, well, Steve, yeah, I look back at a chart, and it's safe to say, I mean, I don't need the PET-D or anything to tell me it's in an uptrend. You're right. When you look back at anything, you don't need any indicator or any teacher or any mentor to tell you what it's been doing. It's very simple to see. But what you want to know is what it's going to do prior to that, or at least have some type of an edge. And if we applied the PET-D, well, the PET-D told us well back here that it was in an uptrend, okay? A good 20 points lower. And then look at all the chances you had to jump on board. You see, our job as traders is very simple. It's just twofold. Job number 1 is we want to listen to the market and find out what direction it wants to go. That's what the PET-D does. Job number 2, add a little structure and just jump on board. We're not going to fight it. We're not going to try and tell the market, well, you've gone up high enough, this is where you're topping out, or you've gone down low enough, this is where you're bottoming out. Or, all my indicators and all my institutional stuff tells me that this is where the support is or this. We don't do that. Just listen to the market. The market tells you everything it's going to do, and we just jump on board. That's all our job is. It's extremely simple. Remember, we overcomplicate things. That's why the majority of traders fail. Let's look at DVA. Once again, coming into August, we were in an uptrend, but then we started to have a little splash here of red bars. So how can we take advantage of that? Well, right here. Second week of August, we have a bearish engulfing pattern, and bar number 2 is red. So that's a sell signal. Now, it's your choice whether you want to take this or not, but that would have been a nice signal to the downside. 12 points coming into this past week in September. We look at ADSK here coming into September as well. The majority of the bars are green. That is telling us we're in an uptrend, okay? The market is telling us that our translator is the PET-D. The PET-D is not predicting anything. It does not predict how high the stock will go or how low it will go. It does not predict how long it will be in a trend. It's just translating at the moment what the market wants to do. That's all it's doing, okay? It's not predicting or telling us anything other than that. So once it's telling us what the market wants to do, we have to apply a little structure in order to jump on board at a convenient place. Our structure in this case are candlesticks. They're just a pattern that we look for that gives us a little structure telling us when to enter. So we see here, here's a candlestick pattern, and this is one of our advanced patterns. It's a candlestick pattern +3. I'm not going to go into it. It's a bullish engulfing pattern +3, but it's a very strong, powerful pattern. Okay, we teach this in our courses. And in one day, the stock rose 5 points. Okay, now, this is an advanced way to trade where you would be entering on the end of that day, but you can just see how powerful this is when you're in sync with the market and you're not trying to fight it. Now, a lot of people say, well, Steve, that's all well and good, but if a news event comes out, there's nothing that works. You can never be 100% sure you're going to be on the right side of the news. Now, I would be the first one to agree with you. That's true. I mean, I've been trading long enough to know that news events can come out of the blue and, you'll be caught on the wrong side. It's been my experience, though, that most of the time, once again, not 100%, but most of the time, news events work in sync with whatever the trend is. Okay, you saw those examples where the stock gapped down 10, 20 points in the opening the next day. Well, we were already short because the trend was already going lower. So that bad news that whatever came out was in sync with a downtrend. Same thing we just saw on this last chart. Okay, well, the stock gapped up and was up 5 points the next day. Obviously, something came out to make it rise that strongly. Well, it was already in sync with an uptrend. So if you're in sync with the news, it's been my experience that oftentimes the news will benefit you rather than go the opposite direction. Let me share with you an example that had happened earlier this year. This was in LinkedIn. Okay, we all know that LinkedIn got bought out. Yahoo Finance reported that Microsoft will buy LinkedIn for $26.2 billion. Okay, in June they said on Monday that it was buying professional networking service LinkedIn for about $26.2 billion. And it's very good news. Obviously, the stock's going to jump up. This was going to be in June. Now, someone, this is the way most students, beginning students, think. They go, well, Steve, I could never take advantage of something like that because, the big guys know about this news in advance, the smart money. Us little guys with small accounts, we don't know how to trade that stuff. And usually we're on the wrong side. We get killed. So, I don't like to trade because I'm always a victim. Okay. This is the way most traders think. Their mindset is always a victim. It's always the hedge fund guys that ruin the trading for them, always the high frequency traders. It's always the big accounts that screw up their ability to trade. I always tell my students, if you're thinking that way, I don't want you becoming a student of mine because that's the first thing we leave at the door. You don't come in here thinking that someone controls you or controls the way you trade. The only thing your job is to be in sync with the market. That's all you want to do. If you're in sync with the market, the odds are in your favor that you will be consistent. So let me share with you what happened here in LinkedIn. Now, a couple of months prior to that news announcement, we were kind of trending higher, but there was really no very positive way to find out we were going higher if you just look at conventional wisdom. We go up or go down. We were kind of sideways to higher, but nothing really to point out that the stock was going to get bought out or there was a lot of action in it. In fact, if you look here, these were some conventional sell signals, okay? A bearish engulfing pattern, an evening star pattern, another bearish engulfing pattern. So if you were trading conventionally, this is where you would have lost money. You would have taken those sell signals and you would have missed everything because the first thing we want to do is trade candlesticks in sync with the trend. And you see here the majority of the bars are green. So candlesticks want to be going in sync with that, not trying to pick a top, going in sync. So once we know that the majority of the bars are green, we look for structure. And look at all the bullish engulfing patterns we had here in advance of that news. Now, if you were investing in LinkedIn and you took advantage of any of these, well, you would have had a nice profit if you held out for a couple of months. That's 70 points in your favor, okay? We didn't know about the news. No one called us up once again and said, hey, tell your students to go long LinkedIn because in a couple of months we're going to get bought out by Microsoft. Remember, it's been my experience that the market tells you just about everything you need to know. The only trouble is that we've been trained, myself included, never to listen to the market. Now we can also apply this to ETFs. Here's an older chart, beginning of the year, coming into the spiders. If you recall, the very beginning of this year, the first month, January, we had a really strong downward move. Scared a lot of people in the first month of the year. Well, in mid to late December of last year, what do we have here? We have a bearish engulfing pattern in the spiders. That's the ETF that represents the S&P 500. So what is that telling us? It's telling us that most likely the market's going to be going lower. And look what happened, okay? So there's a lot of information that could have saved you that first month of this year. We can also apply this to different markets, commodities. We can look at the 10-year notes. Here is a monthly chart of the 10-year notes. Each one of these bars represents a month. This is going back to December of 2013, about almost 3 years ago. All right. What do we have here? A bullish engulfing pattern in December of 2013 in the 10-year notes on a monthly time frame. All right. So that's telling you that most likely the notes, the 10 years going up. And this is coming in to July and August of this year. How about commodities? Let's look at soybeans. I personally don't trade soybeans, but the same thing applies to any market, any time frame, okay? We have a number of students who just use this on commodities and report some very nice, consistent results. Anyone looking at this will say, Steve, there's no conventional trend here. We're just going sideways this past month. Well, we have two bullish engulfing patterns. All you have to do is apply the PET D and see that bar number 2 on both of those patterns is green. So that's all you need to know. That's all we need to know. And look what soybeans have done, okay? And you have a lot more chances, even if you miss the first ones, to get back in. That's the beauty of trending markets. It will always give you other chances. The only trouble is we're always trying to pick tops in these nice uptrends, and we're always trying to pick bottoms. Crude oil, if anybody recall, last year coming into this year, it had a very strong downward bias, okay? People were trying to pick the bottom in crude oil and losing a lot of money because it kept going lower and lower every day. So if you trade crude oil, the only way you lost money was trying to pick a bottom. But if you were in sync with crude oil on this daily chart, you'll see here that all the bars were red. And look at all the chances you had to go short just using this one candlestick pattern, okay? Now we can also apply this to intraday trading of the futures, the E-mini S&P. This is going back to the 9th, just a couple of weeks ago, on a 5-minute chart of the E-mini S&P. Once again, if you lost money this day, you were trying to pick a bottom, the way 99.9% of all traders trade. Why go against the trend? Why swim upstream? Okay, it's silly. It's a lot easier if you just find out what the market wants to do and jump on board. Now, obviously, the market wanted to go down. Someone looking at hindsight would say, well, Steve, that's easy to see. But we knew at the very beginning of the day, right here, that we were going lower. So all we had to do was look for all of these bearish engulfing patterns, okay? Now, we just taken the very first one here, roughly in the first hour or two of the day. Well, that's 30 points to the downside that we had to work with. If we held it the entire day, that would have been $1,500 per contract. But remember, we don't tell you where to get out. We give you all these different exit techniques. It's up to you how to decide. Some of our students who trade the futures, they say, well, Steve, I like to take a point or two and get out, and I'm done for the day. Great. A lot of others go for the long haul and trade different time frames. In fact, they even trade the different settings. This happened last Friday on the Globex chart. Okay, Friday coming into Monday over the weekend. This is a 60-minute chart of the E-mini. You can see, obviously, we were headed straight up on Friday, and then coming into over the weekend and coming into Monday, we headed straight down. If we apply the PET D, we see how well the PET D could discern all of this well in advance. So all we needed to do was look for the first, second, or third bullish engulfing pattern. Had you taken that first one on Friday, well, that's 20 points to the upside. And then once you got a bearish engulfing, you could have exited and then ridden it down 20 points to the downside. This was just this past week, coming into Monday of this week. Now, lastly, for you Forex traders, nothing changes, nothing alters. We don't edit anything because we're going into a different market. Everything stays the same. That's the beauty of this. That's how simple this is. Now, someone looking at the euro dollar here on this older daily chart would say, not much of a trend here, Steve, but we have a bullish engulfing pattern, and we need for bar number 2 to be green. Guess what? It's green. So yes, there is a lot to see here. The market is telling you it wants to go higher. We just applied some structure. There's our structure for entry. And we went up 600 pips in 3 days, roughly about $6,000 per contract, per lot. Now that's on a daily chart. We can go to a 60-minute chart of the British pound, okay? This is a little bit ago in the British pound when it was headed lower in June. Now, obviously we're in a downtrend. But if we applied the PET D, we would have known well in advance that we were in a downtrend well before we fell out of bed here. And all we have to do is, once we know that the majority of the bars are red, we look for bearish engulfing patterns, okay? Right here, and right here. All the way down you had choices, and in this hourly chart, this could have given you roughly 200 pips in just 2 days, okay? Lastly, we can go long-term. If you're a long-term currency pair trader, here's a monthly chart of the dollar yen. This is going back to 2012. It's going back 4 years roughly, okay? All the bars are red coming into September, October of 2012, except for the last one is green, and it's a bullish engulfing pattern. So what's that telling us? It's telling us that the market wants to go higher. All right, not some currency experts, not some economist on TV, not some guy in a chat room. The market is telling us it wants to go higher. That's all we have to listen to. Guess what? Did it go higher coming into this year? I think so. So let's recap about what we shared with you today. What is the secret ingredient? The secret ingredient is to only buy or sell candlestick patterns that are in sync with the trend or the pet D. That's the secret ingredient to trading candlesticks with consistency, not the old way. Trust me, I traded them the conventional way for the first year of my trading career, and I couldn't make a dime. It's true, I would have good trades every once in a while, and I think, well, this is great. I'm back on track, and so everything's going to make sense now. I'm going to start making money. And then 2 or 3 trades down the road, I'd give everything back, and then it just wouldn't work. As in all those examples I've showed you where if it was going lower and I kept looking for reversal patterns, they just didn't work. It wasn't until my mentor saw how much I was struggling this said, Steve, the secret to trading candlesticks is to be in sync with the trend. And then once they shared with me the formula, the pet D, that's when things really started to add up, okay? Now, here are points to remember. This is not a complete strategy. We just showed you structure with the bullish and bearish engulfing patterns, okay? But we didn't talk about entry signals, okay? Where do you enter, all right? There's numerous ways to enter using candlestick patterns. We didn't talk about anything. Would you enter at the close of that bar, the next bar? Would you place a limit order on the next day? Where would you enter? How about stop placement? How do we protect ourselves? Once again, I'm not going to tell you that every trade is a winner. That would be silly and be foolish. That's like saying every baseball player hits a home run or gets a hit. That's silly. We have to protect ourselves, but where are we going to place our stops? There's numbers of stops in our courses, but which one are we going to take? How about exiting? All right, I showed you all of these different places where you could have taken tremendous gains. Would you have decided to exit at the end of that tremendous run, or would you want to take a smaller profit? Are you the type of trader that likes to get in and out of a lot of trades and exit, or would you like to take as much bang for your buck as possible? We have numerous exit techniques, but we didn't talk about any of them today. And then lastly, money management, okay? How many contracts, how many shares should you be trading, okay? We didn't talk about any of that. How much of your account should you be risking? All right, these are all extremely important pieces of the puzzle to any type of trading plan. We can't just, talk about the trend and then also apply some structure. Those are great, but we also need to apply these pieces of the puzzle because this is what's going to protect you. This is what's going to give you the added structure you need. Now, the other problem is most of the students I come in contact with say, Steve, I'd love to take your courses, but I don't have a strategy. The strategy that I purchased, I spent tens of thousands of dollars on, blew up. It doesn't work at all. Or I've been only trading for such a short time, I don't have a strategy. I look for information such as this to give me an idea of what to do. Well, here's what we're offering all of our attendees today. This is our attendees today only special. This is strategy number 5. This is our candlestick strategy. Many of the signals I share with you today were strategy number 5 signals, along with the pet D. All right, this is a great package we have. In fact, we call it our candlestick combination. All right. With this package, you get instant course access, detailed instruction, upwards of 20 videos. And in these videos, we teach you all the entries, all the different variables for entries, all the different variables for exits, and all the different variables for stops. So you can pick and choose to find out what works best for you. We also give you the add-on for that particular strategy so that it will generate an up and down buy signal for buys and sells. But remember, this is just for educational purposes only. We just want you to be able to check your work to make sure that you can understand why a buy signal was generated so that you don't miss it. After a while, most of our students don't rely on them. They're just for educating you, okay? Included, we offer the pet D. That's the color bar tool. One of our most popular packages altogether. This includes 4 pet D trading techniques. It also includes the add-on that automatically changes the color of your bars. So you don't have to worry about what the trend is. It's right there in front of you. And lastly, you get nearly 40 years of mentoring correspondence with myself. You can contact me through email anytime you like, and I will answer your questions as soon as I can, okay? So let me share with you one last thing we didn't talk about. Once we feel that you have this under your belt, we also supply you with another educational tool. Those are signal alerts. We provide you with daily signals so that you know what to look for. Remember, once again, we are not in the business of force-feeding you trades. We don't believe in that. In fact, that goes against our entire philosophy. We're in the business of educating you. And one of the ways we do that is by giving you signals of certain setups and of trade setups so that you know what to look for, so that you know what to spot. Now, let me show you what would have happened just a week or so ago. This was a signal alert that was sent out to our members. And as you see here, we tell you what the strategy is because certain members have different courses. And PRGO generated a strategy number 5 buy signal on the 21st. So as we look at the stock, once again, conventional wisdom would have said, why would you want to buy this? There's absolutely no trend here. We're going sideways to lower. But we have a buy signal generated. And at the same time, the PET-D is coloring all of these bars green. So where you would have naturally thought it was no trend, we were going sideways to lower, the PET-D is telling you, no, the trend is up. You've got to apply some structure to go long before this gets any higher. So we give you the structure with strategy 5, and the stock rose 5 points in 2 days. All right? And we have numerous ways in which to exit, numerous ways in which to enter. This was just one of the setups that was generated using our candlestick combination. So this is all included, all these detailed instruction 20 videos, different entries, exits, and stops, signal alerts, 4 PET-D trading techniques, along with add-ons for both of the packages so that you can see buy and sell setups, as well as the PET-D color bar tool, along with nearly 40 years of mentoring there as your personal mentor. Now, this is just tons of information. Usually this would cost close to $3,000 to $4,000. Here's what we're doing for all the attendees today. We're dropping it down for a one-time fee of $14.95 along with a $97 per month payment, okay? Now, this is a great, great discount because once again, if you wanted to purchase the entire thing, even with the discount, you would have the lifetime access to both courses for $29.95. But we're dropping it down for all the people that can't afford to make that large sum payment. So we have $14.95 plus $97 per month. Now here's how to take advantage of this, because I know most of you seeing this would say, boy, this could really work for me, but Steve, I don't know if I can come up with that lump sum. Well, here's how to take advantage of that. Contact Pro Trader Strategies. Here's their email address as well as phone number. They have many trading consultants manning the phone, and they can set up a payment plan with you. So if you're interested in putting together something and you want to make sure that you want to be in with this special deal but aren't able to come up with that lump sum, go to the chat box on the far right and you'll see they've placed the link for the sign-up page there. And you can take advantage of that, or you can contact Pro Trader Strategies. But there's lots of ways to become a student of mine and lots of ways to get on that road to consistency. In fact, you can just call them up just for more information about trading with our candlestick combo, no obligation, and they'll be happy to supply you with more information, as well as set you up with a nice payment plan. But here's all the information as well. Remember that link at the very bottom takes you to the sign-up page for this discount, but that's not live. So if you want a live link, just go to the chat box on the far right-hand corner. Okay, now I'm going to take this time to answer any questions you may have. I want to thank you all for holding off on any questions. We'll take the last 10 or 15 minutes here to answer any of them. And let's see. The first one is, would this work with Forex 5-minute charts? Maybe an example. Well, first of all, I can tell you yes. We have many students who apply this to Forex tick charts. Okay, they use the candlestick combo on this strictly for trading the Forex markets. I don't have any examples now because this isn't a this is a static presentation. This is a static PowerPoint presentation. But trust me, I mean, there are so many students that just apply for intraday trading of the Forex, intraday trading of stocks, excuse me, and intraday trading of futures. It works, as I stated about a half hour ago, it works in any market, any time frame, and in any direction. Okay. Let's see. Next question is exit at the opposite signal. Well, yes, that's one way you could. I mean, remember, it's not in our interest to tell you this is the only way to exit. That would be no different from going to a chat room and having someone tell you this is what you have to buy, this is the market time frame, this is where you enter, this is where you exit. Remember, once again, it's been my experience that that's the reason why most traders fail. Where we are different is that we provide you with all the different variables for exits and then let you decide. So if you wanted to exit at the other opposite signal, that would be fine, as long as you felt comfortable with that. Many traders like to do different ways. They want to get in and out quickly, or they want to go on for the long haul. Now, remember, we're going to be going into October next week. All right, we're going into the final stretch. We're going into the last lap of the year. Most traders begin the new year with all these hopes and dreams, wishing and hoping that, well, I'm going to make so much this year. Now, I really, really feel confident I will. Maybe I'll buy that dream car I've been waiting, or maybe have that addition to my house, or maybe go on that dream vacation. And I can almost guarantee that the majority of all traders never reach those goals. In fact, most likely by the middle of the year, they know that they're never going to reach them because they're doing terribly. Here's your chance to start 2017 in sync with the markets, okay? We have traders who've just been trading this candlestick combo for maybe a month or so that have told us, boy, Steve, this is the first time in years I've made money on a consistent basis, all right? Now, this is not guaranteed. We're not going to sit here and tell you that you're going to be a millionaire if you purchase the candlestick combo. All we're trying to tell you is that we have techniques that have stood the test of time and have certain levels of consistency, and we're here to mentor you in them so that you can get on that road to consistency, okay? It's going to take work on your part, but you're going to be a part of the process, and you're going to be responsible for your results. Not someone in a chat room, a trade room, not, some news event where you throw your hands up and say, this stuff doesn't work. You're going to be responsible. So if you are on that road to consistency, you'll only have yourself to thank because you took the time to become a member of the Candlestick Combo. So once again, here's the information you need. If you'd like to talk with somebody about it or just want some more questions to be answered, contact Pro Trader Strategies. You see there's their email address. You can call them directly, and in fact, I think that would probably be the best thing because that way you can talk to them directly and they can answer you over the phone. No obligation. And if you're really seriously interested about becoming a student of mine, they can set you up with a payment plan, okay? And a great, great discount, as we talked about. All right, in conclusion here, I guess that's all the questions. I guess everyone is calling up the phone for the Candlestick Combo. That's great. I want to say thank you so much for attending today. I hope you got something out of this. I hope it will increase your odds for consistency when trading with candlesticks. And I want to thank you so much once again for listening to the presentation. Please be sure and call up Pro Trader Strategies to take advantage of this great, great discount. And I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. We'll see you next time. Bye-bye.